Hey, my name is James Nicholson. Welcome to my channel. There's a big update from the Bank of England governor over the weekend about where they see interest rates going. How fast are they going to come down? When are they going to come down? We're going to talk about that and more in this video. So while you're here, if you haven't done already, make sure you do subscribe to the channel and hit the bell notification. We're so close to 17,000 subscribers now. I'd love to hit that in next week. So make sure you do subscribe and hit the bell. And if you didn't know, the next thing you need to do is smash the like button, tickle the like button, do something to the like button, obliterate that like button over there. That really helps us with the YouTube algorithm. We've had 600,000 views this month, which is insane. And that's all down to you guys that smashed that like button. So, what's going on? Well, the Bank of England have been doing the rounds this weekend, talking about the economy, inflation, how happy they are with things. And they've said that don't expect interest rates to come down particularly quickly. So what's going on? Well, all of this stems from inflation, doesn't it? We've had crazy inflation for the last couple of years. It peaked at nearly 12%. It then had months where we were expecting it to drop, and it didn't. And it's taken a long time to get down to under 5%, which we're just at around now. But it's still a mile off from the bank's target of 2% inflation. And that's really where their concerns are, that we've got to get that down as quickly as we can. Now, we had 14 consecutive interest rate rises. Interest rates were pretty much zero. I think it was 0.1% at one stage. And now they're at 5.25%, which is finally where we've settled. We've had two pauses after that. But as the Bank of England are saying, inflation isn't coming down fast enough. Now, we've got some uncertainties in the world which are causing problems and potentially could mean energy costs go up. We've still got the war in Ukraine, and we've got the new war with Israel and the Palestinians and Hamas. And now that one potentially, hopefully, we've got a ceasefire at the moment. Let's hope that for everyone's sake, not just for the economy, just to be a good person, that let's just hope that at some point that does become a permanent ceasefire, because stability in the world is actually what's going to get us back on track a little bit faster. And that's very, very important. So they're talking about the economy not doing so well. And that's what they've been talking about in the interviews this weekend. The figures have been revised down. So the figures at the moment, we were expecting the economy in 24. So in 2024, the forecast was for 1.8% growth, which isn't too bad, but that's gone. So the new figures are saying that the economy will grow by 0.7%. Not a recession still, which is interesting. I don't know how we've avoided recession with all of this stuff that's gone on the last few years. Fudging numbers maybe is one way that they've done that, but somehow we've avoided a recession. But we're very close to it. And we could even go into a recession in 2024, because that's the number, the 0.7 for the year. So maybe the first half of the year we could be in recession and have a stronger second half. I don't know how they're exactly working out this number. So they're saying 0.7%, and we're not in a recession yet, but we could go into one. Now, 2025 is when the predictions were that we'd have a fairly decent annual growth of 2.5% then. That's been revised down now to 1.4%. So this stuff matters. This stuff is really going to impact the economy. The economy leads into people's jobs, their pay. That's what's going to impact house prices for sure. So interest rates, they're saying, are going to stay higher for longer. But what will change quite quickly is if we do go into an official recession, how you get out of a recession is to stimulate the economy by cutting interest rates. Now, we can listen to the words that the Bank of England are saying. They're saying to us, expect interest rates to be higher for longer. But we've also got to look at this and say, they're not going to tell us that they're going to drop the rates anytime soon. That will be their vocabulary, whatever happens, right? So even if they're thinking, you know what, in December, I'm going to drop rates, which I don't think they are going to, just for certainty here. I don't think they are going to drop them in December. But even if they were thinking that, they're not going to tell us ahead of time, because that means that the rates where they are now is a pointless exercise. If we know that they're coming down, we won't act accordingly how they want us to. Now, they want the economy to be constrained, and they've said interest rates are in an area where it is constraining people. It is causing pain. They know that, and they want that to happen to get this inflation to their 2% target. So 5.25%, where we're sitting at, the markets are pricing in that we will get an interest rate drop next summer. The Bank of England are never ever going to confirm that. If that's their plan, if all goes well, they're not going to tell us that. So it's when you listen to what the Bank of England are saying, it's very hard to really get much out of that, because yes, they've got to do what they've got to do to get the economy back on track, to get the inflation under control. But when they say they're keeping interest rates higher, they might be planning to drop them in March, for all we know. No one knows for sure. It is all based off what happens with that data, and it's all based off if the interest rates do look like they could be dropped, that will just be kind of a surprise for a lot of people. The markets will probably try and price this stuff in to give us some sort of indication, but the Bank of England will not say we're dropping rates at the next meeting ahead of time. They want to be in control of all of this themselves. They didn't do particularly great in the beginning of this inflation. They told us it was transitory. It wasn't. They told us it wasn't going to last as long as it did. That was wrong. And so they've got to build some more confidence with the markets and be seen that they're in control of what's happening. Now, in light of all of this, there are still some good rates. I've been looking again today, 5-year fixed rates. There's quite a few rates now that are less than 5%. That's a big drop from above 6.5%, which we had a year ago today. So even though since in the last year, interest rates at the Bank of England have gone up, mortgage interest rates in the last year, at least in the last few weeks, have started to come down. We talked yesterday about a lender that's got a rate at 3.99%. It's a company called Lend Invest. There's a big fee on that. However, you've got a 4% pretty much rate there. And if you figure out if you were paying 6% somewhere else, maybe that could be an option. And that will help some buy-to-let investors get their deals to stack up and work effectively. So those sorts of deals are not for everyone, but there are some creative deals out there. So if you're an investor or a homeowner and you want to get onto a good deal, go and have a look at these other options. They can reduce your monthly payment. Yes, you're kicking a big lump of debt down the road, but you might be able to refinance when rates are more where you want them to be, closer to. They're not going to get down to 1% again, but you might get them down to 3 or 4% in a year or two. Anyway, let me know, what do you think? When do you think the Bank of England are going to drop rates? I'd love to know your thoughts and comments on that one. Do smash the like button. Why don't you go and check out some more content on my channel? Go and watch this video right here.